Alright, what's up everybody? The video you're about to see is another example video of kind of what we do with our elite members video area for our elite members. And I hope you enjoy the video. If you have any questions at all, as usual, tannerstrading@gmail.com, and make sure to like and subscribe the video. I'd really appreciate that. So again, hope you enjoy the video. Alright, what's up everybody? This is another video for the elite members video library, and it's bullish candle reversal patterns part 3. And what we're going to be going over in this video is the morning star pattern. Pretty short video, just focusing on one specific pattern. We'll go over exactly what it is. We'll go over a few examples. And then at the end of the video, I'll also show you how we can utilize stock charts to scan for this specific candle pattern. So let's go ahead and get started. So right off the bat, the morning star is a bullish candlestick pattern. If you remember bullish, okay, that's increasing, a lot of increasing pressure. Bullish candlestick pattern, which occurs generally at the bottom of a downtrend. The basic characteristics are as follows. The first day, you have a large red candlestick form during the downtrend. So like we talked about, the action is presently bearish. Okay, you have the price decreasing and a large red candlestick form. So you're still bearish at this point. The second day, a bearish gap down occurs, generally not large in nature. It's not a massive gap down, but a gap down nonetheless. And a small-bodied candle, either red, white, doji, black, it doesn't matter, forms that closes below the first red day, or the first red bar from day one. Okay, so day one you have the big red candle. The next day you have a small gap down that occurs, and the price closes below the first day, and usually you have like a doji in many cases. And then you have the key bar is the last bar. The last bar, or the third day, is a large white candle that opens above the middle candle. Okay, so it opens above the second day and closes near the center of the first day's body. Okay, so there's 3 candles that are involved in this specific pattern. You don't really know if there's a possibility of this forming until after the second day, and you don't know for sure if it's formed until after the third day. Okay, so again, you have the large red candlestick on day 1. Day 2, you have a small gap down, and either a white, red, black, doji candle forms that closes below the red candle on day 1. And then the last day, day 3, you have a large white candle that opens above the middle candle and closes near the center or higher of the first day's bar's body. Okay, so those are the 3 characteristics. Now this will make more sense as we go into some examples. You can see here from Investopedia, perfect example. And they say up here this pattern signals a change in the direction of the trend, just like we talked about. We're bullish. We topped out up here. We're bullish at this point, seeing a decrease in price. We have this big, this is day 1 right here, this big red candle forms. Then what do we see happen? When we look over here, it zooms in. Small gap down, okay, small price gaps down, and then we kind of close basically in a doji small red day, but we had the small gap down. That was key. We didn't have another big red candle, but a small gap down and a small candle. And then what do we do this third day? Small gap back up, and then we end up closing at or above the mid-level of the first day. Okay, so we're bearish, price is decreasing, big bearish candle, small gap down, red, white, black, or doji candle forms, small gap back up, and we end up having a nice bullish candle, and you can see we actually saw a reversal of the trend as we started to push back higher. You can see here the morning star. This is day 1 represented here. We have the bearish candle forms. This is the open. This is the close. Obviously, that's a red candle. Closes lower than it opened for the day. The next day, what happens? Price gaps down. This one ends up forming a green candle, but again, like we said, it can be red, green, black, or doji. Doesn't see a ton of price movement. Opens or closes slightly above where it opened. So day 2 candle can be bullish or bearish. And then on day 3, what do we see? We see a gap back up, a small gap back up. And then we end up closing at or above the halfway point of the first candle. Okay, so you can see how it signals a reversal of the trend. We were bearish, we gapped down, we ended up settling. When we gapped down, we didn't see a big red candle form. Okay, we kind of held almost in a doji for that day. Slightly up, slightly down, but essentially in the same range. And then we gap right back up, the bulls take control, and we start to push higher. Very simple pattern. So utilizing this candlestick pattern in our trading. As with any form of technical analysis, we never rely on one thing alone. Trading purely off of candles is not sufficient in my mind. Okay, that will not lead you to be successful and consistent longer term. We still rely most heavily, the key things that we're going to focus on are support and resistance and the technical indicators. Anytime we can find bullish candles or candle patterns that support what the indicators are showing us, however, it improves our chances of success. So if you're watching a basic reversal play and you happen to get a 3 or 4 buy signal and you take your entry, and then you also notice a morning star forms, it increases your chances of success. Or if you happen to be watching a basic or a support reversal play, and you don't quite yet have a 3 or 4 buy signal, but you notice that the second day of a morning star is formed, you watch closely, the third day you get the 3 or 4 buy signal and a morning star is formed, you can feel even more confident in taking your entry. Okay, so that's how you can apply these candle patterns. Same thing goes for example like we talked about with the hammer candle and things of that nature. If you happen to be watching a stock and notice it appears to be bottomed out and 3 or 4 indicators are close to curving up, so you're close to receiving a 3 or 4 buy signal, and a morning star pattern forms, you could look to take your entry on the day of the third candle, so long as the other buy criteria are also met first, so just like we just mentioned. So this can really serve as a confirmation pattern for us when we already are in stocks or close to entering stocks, and can make us feel a little more comfortable that a potential reversal could be occurring. Let's go ahead and move on here. So scanning for a morning star. Stockcharts.com allows us to scan specifically for the morning star pattern. The one concern with this pattern, however, is that we already missed the ideal entry in many cases. Like we talked about, if you're going to scan for this one, it's going to pull up ones that have already formed. So we've already seen a good push on that third day, and we may have missed the ideal entry. There will be times, however, when this pattern forms and we do not yet have a 3 or 4 buy signal. So being aware of the charts with this pattern can allow us to add additional stocks to watch that are close to meeting our other buy criteria for reversal plays and have a bullish candle pattern formed or forming. Finding this pattern via scanning is fairly rare, however. That's one thing to consider, and as you'll see here when we do stock charts, I'm pretty positive nothing will pop up. It's one of those ones that is a little more rare for scanning to pick up. Every once in a while you'll see one pop up though, so it's something that you could consider. So if we go ahead and go to stockcharts.com here, we're under our members area. We've scrolled down under save scans. You can see I have a few of the save scans here. These are the ones that we talk about in our scanning with stock charts video. But for the sake of this video, we're just going to go over to create a new scan. Once we hit that, the basic defined scan section pulls up here. As it stands now, the type we're looking for is we're obviously looking for stocks and daily volume on a 20-day daily volume average greater than 40,000. Now usually we would bump that up, but for the sake of this scan, we're just going to go ahead, let's just put that down to 10,000. See if we can pull anything up at this point. So we'll put that down to 10,000. If you go ahead and scroll down under Scan Builder and under Candlestick Patterns, if you choose that, you're going to see a lot of different candlestick patterns that you can see here. Actually, no, we'll get that in a minute, but for now, let's do Morning Star real quick. Let's insert that. Check our syntax as usual. Obviously, we entered it on our own, so nothing's wrong with that. Your scan syntax is correct. Then we'll go ahead and run the scan. As you can see, count 0. So it didn't pull anything up. Like I talked about, it's a little more rare. It can happen occasionally, but it's one of those things that is going to be rare. But what you can do is if you do happen to have saved scans, okay, so pull them up here, like the Slow Stoke scan, for example. We're looking for stock, country, U.S., daily volume greater than 300,000, the price greater than 1, and the slow stochastic is crossing down below 20. Okay, so if you could do that scan and maybe you wanted to zero it in a little further, you could always go to Candlestick Patterns and look for the Morning Star, or look for example, any of these candles, a hammer candle, anything like that. So if we insert hammer candle, so it'll have to meet all this criteria and that. So if you run that scan, see if anything pops up. You can see nothing. Obviously, anytime you're zeroing it in with a candle, it can decrease your chances of finding something. Whereas if we get rid of that and just run the basic scan we talked about, it's going to pull up 60. So that's one thing you can consider, however, if you're still utilizing these scanning techniques that we talk about in the Scanning with Stock Charts videos. And if you happen to have a day where you have a ton of different charts and you want to maybe zero in a little further, don't be afraid to add candlestick patterns. It doesn't take you very long. You throw in the Morning Star. If nothing pops up, you simply come back and erase it and go from there. So that's just something for you guys to consider when you're doing your scanning. Like we talked about, the Morning Star pattern, it's going to be a little more rare for you to find, but at times you can find it. It can produce some fairly decent chart setups. So I just wanted you guys to be aware of it, and it's something for you guys to consider. So again, Short video, but I feel like it's a good candlestick pattern to know. It's a fairly easy one to spot. It's one of those ones that more times than not, it's going to serve as more of a confirmation after you've already got an entry that the price is reversing, but it's good to know. It can make you more aware of what you're seeing on the chart and hopefully be able to help you guys better with your trading. So as usual, if you have any questions at all, tannerstrading@gmail.com. I'd be more than happy to answer those questions for you. Hope you enjoyed this video and have a great day.